Question 1. Which of the following best describes the principle of indemnity in insurance contracts? A. The insured is entitled to payment only if they fully disclose all risk factors, regardless of the loss amount. B. The insured should be restored to approximately the same financial position after a loss as they were before, without profiting from the insurance. C. The insured can recover more than the actual value of the loss if they have multiple policies covering the same risk. D. The insured is guaranteed complete compensation regardless of any deductible applied to the policy. Answer B. Explanation. A. Incorrect. Although full disclosure of risk factors is essential, it is a requirement for underwriting and risk assessment, not the principle of indemnity. The principle of indemnity ensures fair compensation without profit. B. Correct. The principle of indemnity is fundamental in insurance, aiming to restore the insured to a pre-loss financial state. This avoids moral hazard and encourages fair claims practices. C. Incorrect. Recovering more than the actual loss value is contrary to indemnity principles. Insurance is not meant to profit the insured, and policies typically include provisions like other insurance clauses to prevent overpayment. D. Incorrect. Deductibles are an integral part of many insurance policies, and they reduce the payout amount to encourage risk sharing. Indemnity does not guarantee reimbursement of deductible amounts. Relevant rule. The principle of indemnity is outlined in most insurance policies to ensure that insurance serves as protection, not a source of profit. It aligns with legal principles to prevent unjust enrichment and is reinforced by clauses like other insurance and subrogation. Question 2. Scenario. Mr. Roberts, an independent adjuster, is handling a complex property claim involving fire damage to a commercial building. During his investigation, he finds inconsistencies between the claimant's statements and the police report. Mr. Roberts suspects that the fire may have been intentionally set to obtain insurance money. What is Mr. Roberts' most appropriate next step? A. Close the claim and report his suspicions directly to the insurer's legal team for further action. B. Proceed with the claim as usual, ignoring his suspicions unless there is additional evidence. C. Document his findings, inform the insurer, and continue investigating within ethical and legal limits. D. Deny the claim immediately based on his suspicions of potential fraud. Answer C. Explanation. A. Incorrect. While reporting to the insurer is essential, prematurely closing the claim might be inappropriate without sufficient investigation and could lead to breaches in fair claims practices. B. Incorrect. Ignoring potential fraud goes against the adjuster's duty to investigate thoroughly and ethically. It could lead to unmitigated risks for the insurer. C. Correct. Documenting and reporting the findings while continuing the investigation aligns with the adjuster's responsibilities under fair claims practices. This balanced approach allows the adjuster to handle the claim professionally and ethically. D. Incorrect. Denying the claim without adequate evidence may breach legal requirements and ethical guidelines, exposing the adjuster and the insurer to potential liability. Relevant rule. Virginia's insurance regulations and fair claims practices require adjusters to investigate thoroughly and act ethically, especially when fraud is suspected. Adjusters should maintain a balanced and professional approach, following legal requirements for documentation, reporting, and further investigation. Question 3. Under Virginia commercial property insurance policy, which of the following endorsements would primarily allow the insured to receive payment for the full replacement cost of damaged property regardless of any depreciation? A. Actual cash value, CV endorsement. B. Ordinance or law endorsement. C. Inflation guard endorsement. D. Replacement cost endorsement. Correct answer. D. Explanation. A. Incorrect. An actual cash value SEV endorsement calculates claims based on the replacement cost minus depreciation, so it does not provide full replacement coverage. B. Incorrect. Ordinance or law endorsements cover costs to upgrade a property to comply with current building codes but do not impact depreciation. C. Incorrect. An inflation guard endorsement adjusts the property's coverage limits to account for inflation, but it does not provide replacement cost coverage directly. D. Correct. A replacement cost endorsement removes depreciation from claims calculations, providing the insured with enough funds to replace damaged property with new items of similar kind and quality. Relevant rule. In Virginia, replacement cost endorsements are added to allow full recovery without accounting for depreciation, aligning with policyholder protection and adequate compensation principles in commercial property insurance. Question 4. In Virginia, which of the following best describes the insurable interest required in a property insurance policy? A. The policyholder must own the property outright to have an insurable interest. B. The policyholder must demonstrate a financial stake in the property, meaning they would suffer financial loss if the property were damaged or destroyed. C. The policyholder must occupy the property as their primary residence to have an insurable interest. D. The policyholder must have inherited the property to qualify for insurable interest. Answer B. Explanation A. Incorrect. Ownership is not the only criterion for insurable interest. Leases, mortgages, and other financial interests can also establish insurable interest. B. Correct. Insurable interest requires that the policyholder would face a financial loss if the insured property is damaged or lost. This requirement ensures that insurance remains a tool for indemnification, not profit. C. Incorrect. Residency is not required for insurable interest. A policyholder can insure properties they own or lease but do not occupy. D. Incorrect. Inheritance is not a requirement for insurable interest. Anyone with a financial stake may hold an insurable interest. Relevant rule. Virginia insurance law upholds the principle of insurable interest to ensure valid claims and prevent insurance fraud. A policyholder must stand to suffer financially from the loss of the insured property to make valid claims. Question 5. Which of the following describes the duty of an adjuster under Virginia's Fair Claims Settlement Practices? A. Adjusters must only work to settle claims if the insurer benefits financially. B. Adjusters must investigate claims fairly and thoroughly, providing timely communication and avoiding unnecessary delays. C. Adjusters are required to favor the claimant in the event of a disputed claim. D. Adjusters are only obligated to investigate claims up to a specific dollar amount. Answer B. Explanation A. Incorrect. Adjusters must prioritize fairness, ethical conduct, and transparency, not solely the insurer's financial interest. B. Correct. The Virginia Fair Claims Settlement Practices Act mandates that adjusters conduct fair investigations, communicate promptly, and avoid undue delays in claim settlements. C. Incorrect. Adjusters must maintain neutrality, not automatically favor one party over another, regardless of the dispute. D. Incorrect. There is no limit on the dollar amount up to which adjusters must investigate. They are responsible for conducting thorough investigations for all claims. Relevant rule. The Virginia Fair Claims Settlement Practices Act protects consumers by ensuring that adjusters and insurers engage in ethical, transparent, and prompt claim handling procedures. Question 6. Scenario. Mrs. Sanchez's Virginia home suffered extensive damage from a storm and her homeowner's insurance policy includes replacement cost coverage. During the claims process, Mrs. Sanchez decides to repair some damaged parts of her home instead of replacing them fully. How should the adjuster handle the claim? A. Prove a full replacement cost payment as per the policy terms, regardless of Mrs. Sanchez's decision to repair. B. Deny the claim as replacement cost coverage does not apply to repairs. C. Pay an amount based on the cost of repair rather than the full replacement cost, as Mrs. Sanchez chose repair over replacement. D. Recommend that Mrs. Sanchez replace all items to receive payment, otherwise no payout is provided. Answer C. Explanation A. Incorrect. Replacement cost coverage typically applies to actual replacement, but if the policyholder opts for repair, payment can be adjusted based on the repair costs. B. Incorrect. Replacement cost coverage does not prohibit repairs. The adjuster should calculate based on the actual course of action. C. Correct. When a policyholder chooses to repair instead of replace, the adjuster should base the settlement on the repair cost rather than the full replacement cost. D. Incorrect. Insurers do not mandate replacement, and they can adjust payment to align with the insured's repair choices. A relevant rule. Virginia insurance policies with replacement cost endorsements generally cover the cost to replace items but can be settled based on repair costs if the policyholder opts for repairs. Question 7. What is the primary purpose of an ordinance or law endorsement in a commercial property insurance policy? A. To increase the coverage limits automatically to account for inflation. B. To cover additional costs needed to upgrade a damaged building to current building codes. C. To provide coverage for losses arising from civil commotions or riots. D. To ensure contents against all types of theft, regardless of policy exclusions. Answer B. Explanation A. Incorrect. An inflation guard endorsement, not an ordinance or law endorsement, adjusts coverage for inflation. B. Correct. An ordinance or law endorsement covers additional expenses necessary to meet updated building codes, which can be significant in rebuilding older properties. C. Incorrect. Coverage for civil commotions or riots is usually included in standard property policies, not an ordinance or law endorsement. D. Incorrect. Ordinance or law endorsements focus on compliance upgrades, not theft protection. Relevant rule. Ordinance or law endorsements are critical in Virginia commercial property policies, particularly when building code updates require significant changes upon rebuilding or repairs. Question 8. In a Virginia personal auto policy, which of the following is a valid reason for the insurer to cancel a policy midterm? A. The insured was involved in a minor, at-fault accident with no injuries. B. The insured's license was revoked due to a series of traffic violations. C. The insured's vehicle was parked in a high-risk area overnight. D. The insured added a new driver to the policy. Answer: B. Explanation. A. Incorrect. A minor, at-fault accident does not typically warrant midterm cancellation. B. Correct. In Virginia, insurers may cancel a policy midterm if the insured's license is revoked, as this significantly impacts the insurer's risk exposure. C. Incorrect. Vehicle location is typically a rating factor but is not grounds for policy cancellation. D. Incorrect. Adding a new driver might affect the premium but does not usually result in midterm cancellation. Relevant rule: Virginia insurance laws allow policy cancellations for specific reasons, including license revocation, which directly impacts the insured's risk profile. Question 9. Which of the following adjuster actions could lead to a claim of bad faith under Virginia's claims handling regulations? A. Denying a claim based on clear policy exclusions with proper documentation. B. Investigating a claim and promptly responding to all policyholder inquiries. C. Offering a settlement substantially lower than the claim value without justification. D. Requesting additional documentation to support a legitimate investigation. Answer: C. Explanation. A. Incorrect. Denying a claim with documented, valid exclusions is compliant with claims practices. B. Incorrect. Prompt and thorough responses align with Virginia's fair claims practices. C. Correct. Offering a lowball settlement without proper grounds can be seen as acting in bad faith, violating fair claims standards. D. Incorrect. Requesting additional information to assess a claim fully is a standard, acceptable practice. Relevant rule: Virginia's Fair Claims Settlement Practices Act outlines standards for fair claims handling. Offering unreasonably low settlements without basis could result in a bad faith claim against the adjuster and insurer. Question 10. In Virginia, which of the following types of liability damages compensates the injured party for measurable losses such as medical expenses or lost wages? A. General damages. B. Punitive damages. C. Special damages. D. Nominal damages. Answer: C. Explanation. A. Incorrect. General damages address non-economic losses such as pain and suffering, not specific financial losses. B. Incorrect. Punitive damages are awarded to punish the defendant, not to compensate for specific losses. C. Correct. Special damages cover quantifiable financial losses such as medical expenses and lost earnings. D. Incorrect. Nominal damages are symbolic, awarded when no actual damage is shown. Relevant rule: Virginia liability insurance policies distinguish between general and special damages, the latter being reserved for tangible, measurable losses suffered by the injured party. Question 11. Under Virginia law, if an insured submits a first-party property damage claim, within how many days must the insurer acknowledge the claim after receiving notice? A. 7 days. B. 15 days. C. 30 days. D. 45 days. Answer: B. Explanation. A. Incorrect. Virginia law does not require acknowledgement within 7 days. B. Correct. Virginia law requires insurers to acknowledge receipt of first-party property damage claims within 15 days of receiving notice. C. Incorrect. 30 days is too long and exceeds the requirement for initial acknowledgement. D. Incorrect. 45 days is well beyond the acknowledgement period mandated in Virginia. Relevant rule: Virginia's insurance code mandates timely acknowledgement of claims to ensure that insurers respond efficiently, benefiting policyholders with prompt claim handling. Question 12. Which of the following is an example of a moral hazard in the context of property insurance? A. A home located in a flood-prone area. B. The insured failing to install a security system. C. An insured who has a history of intentionally setting fires to claim insurance money. D. An insured's home being surrounded by dense trees. Answer: C. Explanation. A. Incorrect. This is a physical hazard due to the home's location. B. Incorrect. While neglecting to install a security system may indicate risk, it is not an intentional moral hazard. C. Correct. A moral hazard involves the insured's behavior, such as committing fraud by intentionally causing losses to profit from insurance. D. Incorrect. Dense trees are considered an environmental or physical hazard. A relevant rule: a moral hazard arises from the insured's actions or intentions, which may increase the likelihood of a loss due to unethical or risky behavior. Question 13. Scenario: Mr. Thompson, a Virginia homeowner, experiences damage to his detached garage during a severe storm. The adjuster determines that repairs will cost approximately $8,000. Mr. Thompson's homeowner's insurance policy includes a coverage B limit of $10,000. How much will the insurer likely pay for this claim assuming no deductible applies? A. $5,000. B. $8,000. C. $10,000. D. $0. Answer. B. Explanation. A. Incorrect. There is no basis for partial payment if the repair costs are within the coverage limit. B. Correct. Since the repair cost of $8,000 is below the coverage B limit of $10,000, the insurer would cover the full repair cost of $8,000. C. Incorrect. The insurer will not pay the limit of $10,000 as the repair costs do not exceed that amount. D. Incorrect. The claim is valid and there is no deductible in this scenario. A relevant rule. Coverage B in homeowners insurance policies typically covers detached structures with payment up to the policy limit for covered damage. Question 14. In Virginia, which of the following describes a typical role of a public adjuster? A. To represent the insurer in handling claims. B. To assist policyholders in negotiating and settling claims with insurers. C. To act as an arbitrator in disputed claims. D. To approve claims on behalf of the insurer. Answer. B. Explanation. A. Incorrect. Public adjusters work for policyholders, not insurers. B. Correct. Public adjusters advocate on behalf of policyholders, helping them navigate claims processes and negotiate settlements. C. Incorrect. An arbitrator is a neutral third party, not a public adjuster. D. Incorrect. Public adjusters do not have the authority to approve claims. Relevant rule. Public adjusters are licensed to represent and assist policyholders in obtaining fair claims settlements from insurers. Question 15. Which of the following is a key function of the Virginia Bureau of Insurance? A. Investigating insurance fraud only in health insurance claims. B. Enforcing rate regulation laws for insurance products. C. Representing insurers in litigation against policyholders. D. Setting coverage limits for all types of insurance policies. Answer. B. Explanation. A. Incorrect. The Bureau investigates various types of insurance fraud, not limited to health claims. B. Correct. The Virginia Bureau of Insurance regulates insurance rates to ensure they are fair and adequate. C. Incorrect. The Bureau does not represent insurers in litigation. D. Incorrect. Coverage limits are determined by policy terms, not set directly by the Bureau. Relevant rule. The Virginia Bureau of Insurance oversees rate regulation, fraud investigation, and consumer protection within the insurance industry. Question 16. Which of the following types of losses is typically covered under a standard commercial general liability (CGL) policy? The employee injury claims. B. Customer property damage claims. C. Automobile accidents involving company vehicles. D. Business property damage from a fire. Answer. B. Explanation. A. Incorrect. Employee injuries are generally covered under workers' compensation. B. Correct. A CGL policy covers claims for damages to third-party property due to the insured's operations. C. Incorrect. Automobile accidents are covered under a commercial auto policy, not CGL. D. Incorrect. Business property damage is typically covered under commercial property insurance. Relevant rule. CGL policies protect businesses from liability claims related to bodily injury or property damage to third parties. Question 17. What is the purpose of a claims-made liability policy commonly used in Virginia? A. To cover claims that occurred during the policy term, regardless of when they are reported. B. To cover claims made and reported during the policy period or extended reporting period. C. To cover any loss, regardless of policy period. D. To provide coverage without any specified limits. Answer. B. Explanation. A. Incorrect. This describes an occurrence policy. B. Correct. Claims-made policies cover claims reported during the policy term or an extended reporting period. C. Incorrect. Claims-made policies only cover losses during the active policy period. D. Incorrect. Claims-made policies have specified coverage limits. Relevant rule. Claims-made policies are common for liability coverage, requiring claims to be reported within the policy term to trigger coverage. Question 18. Scenario. A Virginia business purchases business interruption insurance. A covered fire shuts down operations for 3 months. Which of the following costs would the policy likely cover? A. Damages paid to injured employees. B. Costs to repair the building. C. Lost income during the shutdown. D. Replacing damaged inventory. correct answer. C. Explanation. A. Incorrect. Business interruption does not cover liability-related damages. B. Incorrect. Property insurance covers building repairs. C. Correct. Business interruption insurance compensates the business for income lost during the covered shutdown. D. Incorrect. Damaged inventory is typically covered under commercial property insurance. Relevant rule. Business interruption insurance aims to restore lost income and certain operational expenses during a shutdown from a covered event. Question 19. What is subrogation in insurance? A. A clause that prevents any party from claiming the insurance payout. B. The insurer's right to recover funds from a third party responsible for the insured's loss. C. An arrangement where an insurer covers all costs without limits. D. A policyholder's obligation to report claims only after a lawsuit is filed. Answer. B. Explanation. A. Incorrect. Subrogation does not limit insurance payouts. B. Correct. Subrogation allows insurers to seek reimbursement from third parties responsible for the loss. C. Incorrect. Subrogation does not eliminate coverage limits. D. Incorrect. Subrogation is unrelated to the timing of claims reporting. Relevant rule. Subrogation helps insurers recover costs from third parties at fault, maintaining fairness and accountability in claims. Question 20. Which of the following best describes the primary goal of insurance regulation in Virginia? A. To ensure that all claims are denied unless proven valid in court. B. To provide insurers with unrestricted control over rate setting. C. To protect consumers and promote a fair, solvent insurance market. D. To allow insurers to operate without oversight for increased competition. Answer. C. Explanation. A. Incorrect. Denying claims arbitrarily is against consumer protection principles. B. Incorrect. Virginia regulates rates to ensure they are fair, adequate, and not excessive. C. Correct. Virginia insurance regulation aims to protect consumers, maintain fair practices, and ensure insurers remain solvent. D. Incorrect. Insurers in Virginia are subject to oversight to prevent unfair practices. Relevant rule. The Virginia Bureau of Insurance aims to balance insurer operations with consumer protection through regulations and solvency requirements. Question 21. In Virginia, what is the standard statute of limitations for filing a lawsuit related to a property damage claim? A. 1 year. B. 2 years. C. 3 years. D. 5 years. Answer. B. Explanation. A. Incorrect. Virginia's statute of limitations for property damage claims exceeds 1 year. B. Correct. Virginia generally allows 2 years for filing a lawsuit related to property damage claims. C. Incorrect. The statute of limitations for property damage claims in Virginia is not 3 years. D. Incorrect. 5 years is too long for property damage claims. Relevant rule. Virginia imposes a 2-year statute of limitations for property damage lawsuits promoting timely legal actions. Question 22. Scenario. A Virginia homeowner's policy has a $1,000 deductible. If wind damage results in a $5,000 repair estimate, how much will the insurer pay? A. $4,000. B. $5,000. C. $6,000. D. $1,000. Answer. A. Explanation. A. Correct. The insurer will pay $5,000 minus the $1,000 deductible, totaling $4,000. B. Incorrect. This would ignore the deductible. C. Incorrect. This exceeds the estimated repair cost. D. Incorrect. $1,000 is the deductible amount, not the insurer's payment. Relevant rule. Deductibles reduce the amount an insurer pays by the policyholder's portion of the covered loss. Question 23. Which of the following is typically excluded under standard Virginia homeowners policy? A. Theft of personal property. B. Fire damage to the dwelling. C. Flood damage to the property. D. Vandalism damage to a detached garage. Answer. C. Explanation. A. Incorrect. Theft of personal property is usually covered. B. Incorrect. Fire damage to the dwelling is a standard coverage. C. Correct. Flood damage is generally excluded and requires separate flood insurance. D. Incorrect. Vandalism to a detached structure is generally covered under coverage B. Relevant rule. Flood damage is excluded from standard homeowners policies and typically requires a separate policy. Question 24. In Virginia, what is the primary responsibility of the Commissioner of Insurance? A. Arbitrating insurance disputes. B. Setting premiums for all insurance products. C. Enforcing insurance regulations and consumer protection. D. Investigating only claims of insurance fraud. Answer. C. Explanation. A. Incorrect. Disputes are typically resolved through the courts or other bodies. B. Incorrect. The Commissioner does not set premiums directly. C. Correct. The Commissioner oversees and enforces Virginia insurance laws and regulations. D. Incorrect. While the Commissioner investigates fraud, responsibilities extend beyond this. Relevant rule. The Commissioner of Insurance is responsible for regulating and ensuring compliance within the Virginia insurance industry. Question 25. What is the purpose of a loss payer clause in an insurance policy? A. To designate a beneficiary who will receive death benefits. B. To specify who receives payment for damages to insured property. C. To exclude certain types of property from coverage. D. To provide additional insured status for a third party. Answer. B. Explanation. A. Incorrect. A loss payee clause relates to property insurance, not life insurance. B. Correct. A loss payee clause specifies the NC, often a lender, to whom payment is directed in the event of loss. C. Incorrect. Exclusions are specified in other sections of the policy. D. Incorrect. Additional insured status is separate from the loss payee designation. Relevant rule. Loss payee clauses protect lenders' interests by directing insurance payouts to them when collateralized property is damaged. Question 26. Scenario. A commercial property policy has a coinsurance clause of 80%. If the insured building is valued at $1 million and the policyholder insures it for only $600,000, what penalty applies to a $100,000 covered loss? A. $60,000. B. $80,000. C. $75,000. D. $100,000. Answer. C. Explanation. A. Incorrect. $60,000 does not accurately calculate the coinsurance penalty. B. Incorrect. $80,000 does not accurately represent the insured amount's impact on coverage. C. Correct. With 80% coinsurance required, $800,000 and only $600,000 insured, the penalty reduces the payment to $75,000. D. Incorrect. The policyholder receives less than the full $100,000 due to the coinsurance shortfall. Relevant rule. Coinsurance clauses require policyholders to carry a specific amount of insurance to avoid penalties during claims. Question 27. What is the purpose of a binder in Virginia insurance transactions? A. To provide long-term coverage before the actual policy is issued. B. To temporarily provide insurance coverage before the formal policy issuance. C. To act as the final insurance policy document. D. To list the exclusions and endorsements on a policy. Answer. B. Explanation. A. Incorrect. Binders are temporary and not intended for long-term coverage. B. Correct. Binders serve as temporary coverage until a policy is issued. C. Incorrect. The actual policy serves as the final insurance document. D. Incorrect. While binders may indicate coverage, they do not list exclusions. Relevant rule. Binders provide temporary evidence of insurance coverage pending the formal issuance of the policy. Question 20. Which of the following perils would a typical named peril homeowners policy in Virginia cover? A. Earthquake. B. Nuclear hazard. C. Theft. D. Flood. Answer. C. Explanation. A. Incorrect. Earthquake coverage usually requires an endorsement. B. Incorrect. Nuclear hazards are typically excluded. C. Correct. Theft is commonly covered under named peril policies. D. Incorrect. Flood is excluded and generally requires separate insurance. Relevant rule. Named peril policies provide coverage only for perils explicitly listed in the policy, often including theft. Question 29. What is the Virginia Property and Casualty Insurance Guarantee Association responsible for? A. Providing coverage for high-risk properties. B. Ensuring that all policyholders receive rebates on premiums. C. Paying claims if a licensed insurer becomes insolvent. D. Offering discounts for policyholders with multiple policies. Answer. C. Explanation. A. Incorrect. A guarantee association does not provide high-risk coverage. B. Incorrect. Premium rebates are not managed by the association. C. Correct. A guarantee association pays claims to policyholders if their insurer becomes insolvent. D. Incorrect. Discounts are managed by insurers, not the guarantee association. Relevant rule. The Virginia Property and Casualty Insurance Guarantee Association protects consumers by covering claims in the event of insurer insolvency. Question 30. Scenario. An insured Virginia business faces a lawsuit due to an alleged slip and fall injury on its premises. Which coverage in a commercial general liability CGL policy would respond to the legal defense costs? A. Personal and advertising injury. B. Bodily injury and property damage liability. C. Medical payments. D. Business personal property. Answer: B. Explanation. A. Incorrect. Personal and advertising injury does not cover bodily injury claims. B. Correct. The bodily injury and property damage liability coverage includes defense costs for bodily injury claims. C. Incorrect. Medical payments cover limited medical expenses but do not cover defense costs. D. Incorrect. Business personal property coverage applies to property, not liability defense costs. Relevant rule: CGL policies generally cover defense costs under bodily injury and property damage liability, protecting businesses from lawsuit-related expenses.